Good evening, I'm Courtney Jerome, and welcome to Ask the Specialists. Tonight we ask the CPAs right here on CMU Public Television. Thank you for joining us on Ask the CPAs tonight. If you have any financial questions that you need assistance with, tonight this program is for you. We welcome you to give us a call or send us a question via social media so we can ask our live in-studio CPAs who are here to answer every question that you might have. And it's tax season, so we're expecting that you have a lot. So when you give us a call at 844-975-3343, you'll speak with one of our phone operators who are standing by to take your question. We also have social media available, facebook.com/askthespecialist, or you can send us a tweet to @WCMU_AskThe. And when you ask those questions, the two of you will be answering tonight. So I'd like to take this opportunity to introduce you to Herb Wybanga from Bogue, Wybanga and Bradley in Mount Pleasant, and to Mike Carter at Robert F. Murray and Company in Mount Pleasant as well. Thank you both for being here tonight.
Thank you.
Our pleasure.
Now, Herb,
got us out of the office.
Oh, yes.
Yes.
Herb, can we start off with you describing a little bit of your expertise and background?
I've been doing tax returns since 1983, so quite a few years. Our firm, again, does a lot of tax work, and we do a lot of financial statements, compilations, reviews. We do a lot of different businesses, agricultural. We do restaurants. Quite a number of different businesses, small usually, but yeah.
Okay, great. So you'll be able to take on personal finance questions as well as for businesses
Correct.
tonight.
Yeah.
Okay, excellent, great. And then, Mike, how about you? What kind of questions will you be able to answer tonight?
Well, like Herb, our firms are very similar as far as the types of the depth of businesses that we deal with and individuals. I'm also a certified financial planner, so I do financial planning, do some investment work with folks too. So we'll do our best to field whatever comes our way tonight. But you know, taxes, like I said, it's tax season, so we're kind of geared for tax season right now.
Okay, perfect. So as you just saw, they have a wide variety of expertise. They will definitely be able to answer your calls tonight. So pick up your phone, hop on your computer, and send us a question. Just to get us started here, what types of things can a CPA help our viewers with? Anything specific that you get a lot of?
Well, you know, I think just the basic business background, we can help people with forming businesses, with their accounting system. Certainly the taxes is always important to people. Trying to formulate a business plan for them to see you know, what they need to do, what kind of sales and revenues that need to be generated to cover costs. That's probably one of the biggest problems with businesses. They have great ideas, want to do a certain kind of a business, but really don't grasp the cost, the amount of money that's needed to start a business. Mm-hmm. And so I think we can be a real advocate to folks before they start the business. Come on in and talk to us about what needs to be done, what kind of money needs to be provided to get off to a good start.
Okay, excellent. Well, we know there have been some political advertisements in recent months that might have been a little bit confusing for viewers when it comes to their finances, and specifically pension exclusions. So can you clarify the Michigan rules on those pension exclusions, please?
What changed in 2012 is the pension deduction from the Michigan income taxation was used to be subtracted out completely, or there was a limit for married joint. It was about $90,000, and so Snyder changed the rules, and now if you're born before 1946, you still have the $90,000 exclusion or subtraction for pensions. If you're born between 46 and 52, you're limited to $40,000 married joint and $20,000 single, and then before 52, you pay tax basically on your pension, private pensions.
Okay.
So that's kind of.
But there's still some exclusions for that mid-range that Herb talked about too, and it's against all income. It's not just pension income. So I think some of the commercials made it sound like our seniors were going to have their pensions taxed, and like Herb said, pretty generous exclusions for those that are 68, 69 and older right now. So hopefully that gets, but it's not quite a simple matrix of questions here, but hopefully that'll clarify it a little bit here.
Okay, excellent. Thank you for clarifying that. Now, another question that you've been receiving quite a lot these days is the ACA reporting requirements. Can we also touch on those requirements for individual filers this year?
Well, now we have to get with our folks and talk about health care coverage. And we have to report whether they had the minimum required medical coverage. If they didn't, then there could be a penalty imposed. And so we're having to do a little bit more inquiry with our clients, and there are these premium credits if they went through the Affordable Care Act to get their health care. There's forms that are coming back to them that we have to report. So it's really increased the tax preparation aspect for clients, and some clients that typically aren't looking for more tax prep, but it's pulling people into having to have their tax return done that they didn't have to have before, and more work for those that have maybe a very basic tax return. So it's not necessarily favorable for the taxpayers from a cost standpoint and a time standpoint, but that's where we are right now, and it's only going to keep getting more and more.
Okay.
I had a couple taxpayers this year that, went on the market, got their health insurance on the marketplace, reported their estimated household income. Well, you get subsidies based on your household income. Well, they came in and did their tax return, their household income was much higher, and they had to pay some of that subsidy back. So it can really ding you if you're not watching what your household income is.
Wasn't there just a report that there's about 800,000 or 1 million taxpayers who got the incorrect information from the government about the premium credit? So now, so hopefully that bug will be worked out too. So those folks will probably have to end up amending returns.
Well, and the 1095A, the reporting document from the marketplace was, the original was issued in error, and I heard there's amended ones coming out also.
Yeah.
So that's
fun for everybody.
Yeah.
Fun for everybody.
Right.
So that's why it's really important to have your own CPA to be able to help you out when there are circumstances like that.
It's getting more complicated. Sure.
Well, I hear the phones are ringing, so please continue to give us your questions over the phone or via social media. We had one come in from Facebook earlier. It looks like the viewer received a 1099 claiming that they were paid more than they actually received. The sender and the viewer are no longer in contact due to other repeated financial inaccuracies over the past year. So their question is, do I have to claim what the 1099 says, or do I claim what I was really paid?
Well, I think your first bet, if there wasn't an adversarial condition or position right now, you'd like to go back to them and ask them to amend the 1099 because there is tracking. The IRS tracks 1099s, W-2s to your return. I guess what I would recommend, certainly don't just report what's on the 1099. You want to report what's accurate. But because of this tracking system, I would probably report the 1099 at the gross amount and then have a subtraction within the return to net it out to get it to the number that really should be reported as taxable income. That may fight off any correspondence from the IRS and get you to your number that's really true.
Okay, great.
And have a good backup for why you backed that number down as far as your deposits and whatnot in case it's questioned.
Okay, and speaking of backups, Herb, I think this is going to flow really well into our next question from Atlanta. In 1995, they bought a share for recreational property. How do they verify the original purchase price for tax purposes? Sounds like they might not have that backup.
Yeah, that happens quite a bit. My position is if they know about what they paid for the property, that would be considered their cost basis, and I would use what the taxpayer tells me, and then obviously it'd have to be audited before they would have to prove that cost basis. So at that point, they'd have to have something. So I don't know if they're buying a share of something, if there's somebody else involved in it, a third party that could verify maybe that cost, something of that nature to help them in case an audit were to occur.
Okay.
That would be the best verification I think they might be able to come up with.
Okay.
And maybe fair market values at the time when they bought the property would help also if they could establish that. So.
Okay. Okay. Great, thank you. Looks like we have a few questions here about claiming individuals on their taxes. So
that's a good one.
I'm going to go to this one here from Colin. Can I claim my two boys, 20 and 29, as exempt on their taxes? They never made enough to claim themselves.
Well, there is an income test, especially for the 29-year-old, and it's a pretty low amount as far as income. So if you were providing the care, the financial support for that person, and I think it's around $3,000, Herb?
$3,900.
$3,900.
Okay.
So if that person earned less than $3,900, yes, you could possibly have them as a dependent. 20-year-old maybe depend a little bit on whether they're in school or not, but still have those income tests there. So possibly, yes, but have to evaluate what kind of income they have, the individuals.
Okay.
On the 20-year-old, as long as he's a full-time student, it doesn't matter what he makes, he can claim him as a dependent. If he's not going to school, then it's the $3,900 test. So that's kind of how it shakes down.
Okay, now these tests, is that an additional form that needs to be filled out or found online, or is it just by honest?
This is data gathering.
Okay.
Just talking with your client. Does the person have that? We don't necessarily have to have proof of that, but
Okay.
it's nice to have proof of that because people get a little confused about what is income.
Right.
And so.
Right. Okay. Now this viewer from Flint about claiming as well. I have Social Security insurance as income. Can they claim their granddaughter and get EIC?
Well, you can claim grandchildren. Again, depends on your position in their support. They talked about an earned income credit, but they had talked about income as being what, Social Security?
Social Security. Mm-hmm.
Well, earned income credit has a connection with earned income, which is typically wages. So if the caller just has Social Security income, I don't see where an earned income credit's going to come into play. They need to have working wages to qualify for an earned income credit.
Okay, okay. And then here's another one about claiming individual. This one came in via social media, Twitter specifically. The grandmother pays tuition for the grandkids. Can she claim that on her taxes?
Tuition, a college tuition, is that?
Yes.
With that? Okay.
I'm assuming.
Yes. Unless the kids are her dependents, then she could take a credit, a college tuition credit, but the children would have to be dependents. The grandchildren would have to be dependents on her return.
Okay. Okay, great. This question is about a K-1 form. They received this tax form with limited partnership, tax preferred. Do you have to recognize the K-1 form?
Yes, a K-1 form is a reporting your share of income from either a partnership, it could be from an S corporation, it could be from a trust or an estate. And so yes, that is reportable income, assuming it's not in a retirement account. But that's part of their return, and that's part of that matching program that I mentioned earlier. If you don't report it, they could be a catch-up and have a letter to you saying, well, why isn't this income on your return? Because this K-1 says you received X amount of dollars of income.
Okay. This caller from Ludington purchased a house for resale purposes. They are asking if they should sell it now or later for tax ramification purposes. Do you have any recommendations on that timeline for them?
Well, I always tell clients when we talk about financial decisions and taxes that oftentimes don't let the tax tail wag the dog. Make a smart financial decision. So is it a smart financial move to sell this house? I like to look at that more so than the taxes. Certainly we're very conscious of tax consequences, but I don't like it to be the leading decision maker in a smart financial decision.
Okay. Now, is there a deduction for caring for an elderly parent at home with hospice involving travel for visiting? Are you aware of any of those type of deductions? This question is coming from Traverse City.
For a parent, is the parent a dependent?
I'm not sure, it doesn't say.
Assuming they are, I would say there's a medical you know, medical deduction in regards to that, but they'd have to itemize, and there's limitations. Like 7.5% of your income is used to reduce those deductions, and of course, you'd have to be able to itemize, I think, to use those medical.
So being the dependent's the key part.
I think so.
Yeah.
Okay. Okay. And if the parent is not a dependent, is there any?
Then those are medical
believe
expenses
so.
of the parent.
Okay.
Right.
Yeah.
Okay. Now, here we have a couple questions about pensions. What's the best way to withdraw the pension at 70.5 or over in terms of taxes?
Depends on their overall tax situation, but I would think as slow as they can.
Okay.
You know, you have required minimum distributions at that point in time, so I would say if they can live on their required minimum distribution, that's what I do, but it depends on their overall tax situation also. I mean, if they're not using their standard deduction, dependent deductions up, then they may want to up it to utilize those deductions plus a lower tax bracket. So it's kind of a hard question to answer generally, you know.
So you'd recommend they probably contact a CPA
Yes,
with more information so they can get the best answer. Okay,
Right.
great.
Well, just a quick lead off on that, because somebody's going to pay taxes on that. And like Herb said, if you're not utilizing the deductions that are allowed to you, you may be wasting those. So if somebody inherits this asset from you, they're going to pay taxes. So there could be a compelling reason to bring those taxes in now as opposed to the beneficiaries. But a lot of factors, but not just a black and white type of an answer on that kind of question.
Right, right. I'm guessing for the rest of the program we're going to be having a lot of those not
Right.
exactly black and white answers. So a lot of these questions are, kind of personal. Let's see, this caller from Redford gets a pension. Do IRA withdrawals count as a pension as far as pension exclusion?
They do.
Yes.
They do.
Yes?
Yep.
Yes. Okay. This caller from Petoskey looks like their mother passed away on December 31st. The mother was the beneficiary to the father's traditional IRA. He's a beneficiary for mom. Does he follow mom's withdrawal schedule or his?
Well, typically, if you inherit a retirement account from someone, you usually can use your life expectancy to then continue those withdrawals. Mom, they may have some situations in the year of death as far as making sure that minimum distributions, had been taken out, but that's one of the planning strategies of leaving IRAs, et cetera, to folks, is that you get to then stretch out the payment schedule once that person passes away and the heirs pick up the ownership of that particular asset.
Okay, thank you. This caller from Livonia looks like they donated some antique furniture to a local organization worth at $500, perhaps even more, they're not sure, but it looks like they can't get a letter from the organization with the worth. So when it comes to taxes, can this viewer put a note in, or what do you recommend for them?
I guess if they were having me do the return, I would probably go ahead and take the non-cash charitable, donation. I'm sure they have a receipt from the organization acknowledging the furniture. Hopefully they have a picture of it. Hopefully it's in good shape, and just get your best shot at what that, that furniture's value is.
Okay, what if they don't have a receipt? Maybe that's what they're waiting on in inclusion two.
Well, they said they didn't put the value. They said the organization wouldn't put a value on it.
Yep, they can't get a letter with the worth. So
yeah, that's very common.
Right.
Okay.
Right. But yeah, it would still seem like the organization will at least give them a letter acknowledging the gift.
Absolutely.
It's up to them really to decide, what the value is on the tax return. It's not the organization's responsibility, to value the gift.
And there's very few of them that will.
Right.
I mean, Goodwill, Salvation Army, they don't want anything to do with trying to value your stuff.
Okay.
And so there are some websites out there too to help you as far as trying to value what's a shirt or a pair of jeans, what's that really worth. It's kind of a garage sale type value. But there's some tools out there to help our clients try to value it, because everybody thinks their stuff's pretty valuable, but the reality is for tax purposes, not so much. So when you have something really valuable, then you really want to have something, third party kind of verification. But They really want to steer away from throwing a value on that. They don't want a responsibility for that at all.
Okay, so offhand, off the top of your head, can you remember what maybe some of those websites are for those third parties? For viewers
I think
to take a look
Goodwill
at?
actually has a has a table for the values, and I think IRS.com would have tables also for those non-cash.
Probably a good Google search.
Right.
We'll find a couple places that will help you value that.
Okay, looking for those credible sources on Google. Always important. Okay, great. We are getting a lot of excellent questions tonight. Thank you so much for giving us a call at our 844 number and sending us questions via social media. That bar will be at the bottom of your screen for the rest of the program, so please continue to submit your questions. It's tax season, so we know that you have them. Here's one from Petoskey about tax returns. How does one depreciate a tractor for a farm on a tax return?
That's a good one.
Agriculture.
Yeah, right. Well, the first question would be, is it used or new?
Okay.
If it's new, you get bonus depreciation on a new tractor for 50%. So you get that right off right away. And then you would take the rest of the tractor over 7 years. Or you could go Section 179 and take the rest of the tractor with an Election 179 deduction. But there's some limitations to that. If it's a used tractor, you can use the 179 deduction. Again, there's limitations, but you could do that. Or you could go the maker 7 years with it. So there's a lot of elections and possibilities there.
Okay, a lot of variables involved. Okay. Okay, well, this viewer from West Bloomfield has a son who lives in Korea, and they are wondering if he can open an IRA account in the U.S. with no income coming in from the U.S. Does that qualify in the IRA account guidelines?
That's a good one.
Depends if
the income is from foreign source.
Korea.
Right now, I don't know that answer, Herb. Maybe you do, but my gut feeling is that the income source, well, there's foreign income exclusions. I think as long as they're a U.S. citizen, I guess I would probably hazard a guess that there could be an IRA deduction for that income, but a little research would have to go on that one.
Yeah, that's a tough one.
Yeah.
Okay.
The easy way out is if it's a USA employer and he's working in Korea, then
right.
would be
just an expatriate or something like that.
Korean employer.
Yeah.
Okay. Well, we only have a handful of minutes left in the program, so what do you say?
Can we just say yes, no,
rapid
yes,
fire
no,
some
yes,
of these? Right? Let's try to get as many answered as we possibly can.
Okay.
If I sell a property, what percentage do I have to pay for capital gains? I'm on fixed income, which is about $40,000 a year.
Maybe zero. Could be up to 20%.
Okay. And how can she find out?
Do the tax. You got to crunch some numbers. You got to,
if it's long term, it's probably zero.
Yeah.
Okay. Okay. Let's see. If I make under $25,000 a year on my pensions, do I have to pay taxes on those pensions?
Yes.
Yes. Okay.
You have to file.
Okay. Simple answers. We are going right on through these. Rapid fire it is. Okay. Presque Isle County, if a person is on low income and their Social Security and Social Security insurance, can they file off their summer and winter land taxes?
Well, they may file a Michigan return to see if they have a property tax credit. That's would be the only compelling reason to file that tax return. But it's not a federal issue; it's a state issue.
Okay. This viewer is from Macomb, and their brother passed away in October, and the viewer inherited their 401k. What do I do with it in terms of my taxes?
Well, they're going to have to start some distribution patterns here. Could be 5 years. It all depends on what the plan document, the beneficiary designations, and it could be longer.
Okay, and so how do they start those?
Well, the HR department of where the person worked probably has some good information about what options are available under the plan document.
Okay. This one is a small business related question from Torch Lake. They have a small business. Is it better to tax business and personal together or separately?
Well, your option to take a small business and tax separately would probably mean you'd want to incorporate the business and have a separate tax return for that business. There's no real good general answer to that without no black and white answers. There's a lot of variables in that question.
probably for a startup business, they probably won't file a separate corporation.
Right.
They might be a limited liability company, but they would then commingle that activity with their personal return until they got to a size that made some sense to go to a larger or a separate entity for tax purposes.
Okay. Okay. This question's from Taylor. During divorce, when you file, if one party itemizes, do both have to?
If you're married filing separate, yes, you both have to itemize then, if one party's itemizing.
So if they're still during the divorce, they are still technically married?
Correct.
Okay.
Until the divorce is final.
Until it's final. Okay.
Or legally separated.
Okay. Great. Thank you. This one's from Mortonville. Is there a place where military members can get a discount on tax services?
Well, I don't know. That's really a company decision about that. There are some organizations out there that do returns for seniors and the like for free. So there may be some services out there that do military returns for free or at a discount.
Okay. Okay, now we'll see if you'll be able to answer this one from Russ Common. Looks like a member or finance officer for the American Legion Post lost the paperwork last year, was told they are no longer a nonprofit. Do you have any recommendations on what they can do to regain those nonprofit status?
I believe they have to go back through the whole process of regaining nonprofit status, of filing the 1023.
Okay.
And going through that whole process again, unfortunately. I think that happens when they don't file a return for 3 years.
Okay.
They lose that status.
Okay.
It's not an easy process.
Not an easy process. Does
Not a quick one, that's for sure.
Does not sound quick, and it does not sound easy. So best of luck to you. I'm afraid this is all the time that we have tonight to answer your questions for our CPAs. Thanks for joining us, and thanks to our guests for being here tonight.
Thank you.
Thank you.
We
Fun.
really appreciate it. Well, we enjoyed having you here. So there were a few questions that we could not get to tonight, so we're going to stay after a little bit in the show and get those questions answered for you, and we will post those answers on our Facebook page. So make sure to head there tomorrow, facebook.com/askthespecialists. And we hope you can also join us next week. We're going to be having a special, not live conversation all about higher education. So I'm Courtney Jerome. Thanks again for watching, and good night.